The Business Link acknowledges and respects that we are on traditional land, meeting grounds, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nations, Métis, and Inuit people. In the spirit of reconciliation, we acknowledge the lands of those who have come before us, reside here now, and in the future. I want to welcome you to part two, building security for your business and family. The second part, like I said, of our two-part financial literacy series. Running a small business, we know that it takes vision and also resilience and smart financial planning, but it's not only for your business, but also for your family's future. So in today's session, we will help you explore practical ways to safeguard both so that you can build true stability and confidence that goes beyond the bottom line. My name is Linda Posada, and I'm the event specialist here at Business Link. If you are returning or if it's your first time joining a Business Link webinar, well, welcome. Business Link is a government-funded nonprofit organization that helps Alberta small business owners start, grow, and thrive. So we offer free one-on-one support, market research, training, and resources to entrepreneurs at any stage of the journey. Now, I'm pleased to introduce our returning speaker for today, Ramon Gahob Jr., a licensed financial professional with World Financial Group. Ramon has a unique background bridging healthcare and financial services, and he's also very passionate about helping individuals, families, and entrepreneurs build financial resilience and protect what they have worked so hard to create. So, Ramon, thank you so much for joining us again. It's over to you.
All right. Thanks so much, Linda. Hopefully I'm loud and clear right now. So good morning, good afternoon, everybody, wherever everyone's joining us from. So again, my name is Ramon Gahob Jr., and I am based out here in Calgary, Alberta. And yes, it is my honor and privilege to be able to be celebrating the Financial Literacy Month together with Business Link. And I do want to thank them as well, especially with Linda, for giving me this opportunity, a platform for me where I could share more about what we do and be able to provide some value in terms of the education we provide. At the same time, help you move and take action towards making sure we get you towards better financial security. So just a little bit about myself. I actually moved from the Philippines to Canada in 2016. I took up master's in health administration. Actually, I used to be a registered nurse back in the Philippines, and I came here as an international student. And when I finished school, I was faced with two challenges. First was being able to find a job in the healthcare industry. And I remember while I was looking for that field of work, I was working 2 to 3 jobs from early in the morning till late at night, 6 to 7 days a week. I don't know if that's an experience that any one of us have here. And my second challenge was probably just equally as big as my first one. Was I thought I was making good money, but now my question was, where was all the money going? Right? I don't know if anyone has ever had that issue where there was too much month at the end of the money. So I knew I needed to make a change. And thankfully, someone had invited me into this organization. And maybe for some of you, you might feel a bit skeptical about what I'm going to be talking about today, because I also felt the same way the first time someone showed me this. And I thought I was not in a position to buy any financial product or get into sort of financial planning and all that kind of stuff. But thankfully, they came with an approach where they wanted to educate me first about how money works and how to make that money work for me, and really give me basic financial literacy that I know will help me and my family anyways. So I actually became part of the organization simply for me to learn. And several months go by, they offered me the opportunity that not only can you learn this for yourself, but you can actually go out there and help a lot of people do the same thing. And that's when I started this opportunity that allowed me to start even on a part-time basis while working in the healthcare industry full-time, which I was able to find myself a job in. And as of a couple of years later, it allowed me to transition fully into the financial industry, and I've never looked back. And as Linda mentioned, yes, it is Financial Literacy Month, and I do want to thank Business Link for giving me a two-part series, right, to be able to share and provide some financial education and be able to give some value with what we do here, right? Because at the end of the day, it doesn't matter if you're a business owner, doesn't matter if you work for someone, maybe you're single, you're married, or whatever your situation is going to be, right? I think everyone deserves financial education, because something that I emphasized last week, and I want to emphasize right at the very start of this webinar, is that there is nobody more interested in your financial future than you are, right? So that's why I want you to take notes, right, and learn something. And of course, I'll try to answer as much questions as I can as we go through the course of this workshop. And at the same time, if you have any questions, you can just reach out to me directly, which we'll chat later. So I just confirm, Linda, that you're seeing my screen now.
I can see your screen perfectly,
Okay,
yes.
perfect. So let's start first with a disclaimer. As I mentioned, I'm a licensed financial professional, so I am licensed in the province of Alberta and several other provinces to do business in the financial and insurance industry. So just for disclaimer here, any information in this presentation is intended for general information and education purposes only, and should not be considered specific or personal investment, insurance, estate planning, legal, or tax advice, or a solicitation to buy insurance or any other financial product. So please consult with a qualified professional for personalized guidance based on your individual situation. So
Mhm.
you will not learn everything during the course of this workshop. I just want to point that out here today. However, we hope that you learn, gain more confidence, and take action towards reaching your goals. And to help us preserve the integrity and context of the information, please do not take any photos, video, or record this workshop. So what are we going to talk about today? So I'm going to break it down into 4 things right here. So first, we're going to talk about the financial foundation mindset and also the S-curve concept. 2 concepts that I talked about last week, and I think it's also worth repeating today as well. Because maybe for some of you, you were not able to attend last week, but now you're attending here for the first time. So which I welcome, by the way. And of course, I want to thank you for your time, and I want to make sure that your time here is worth it. Right. So I'm going to start with those first 2 because, again, doesn't matter who you are, I think you deserve to learn both of them. Now I'm also going to talk about individual and business cycles, what those things look like. And let's talk about proper protection strategies, right? That applies not just for individuals and families, but also for your business needs as well. Okay. So for those who were in the webinar last week, I emphasized the importance of building a financial foundation, which is what we believe here in this organization. Because yes, we want to, I'm sure if I ask you, do you want to make money? Obviously, the answer is going to be yes, right? But has anyone ever asked you ways or ask you whether you want to grow, though not just grow, but also protect your money, right? So we want to make sure that we have to build our financial house from the ground all the way to the top. Think of it like building your financial house. So you got to think about your current situation right now. And with this foundation, there's 4 elements that we take into consideration. First, we're going to make sure that we have proper protection, which is what I'll be emphasizing a lot on this webinar today. So proper protection is more about making sure you take care of your family, take care of yourself in the event if you get sick, you get disabled, or maybe worse, if you pass on. What sort of strategies do you have in place such that you're able to protect your family from those unforeseen events? Next is making sure that you find ways to reduce your expenses and get out of debt faster, and also start building up an emergency fund in case things don't things happen, right? Because I know life usually happens, but especially if you're starting a business, if things don't fall the way that they're supposed to, then it's good to have at least that emergency fund, and make sure to start saving and investing for the long term as well. Because we believe that without a strong foundation, your financial house won't stand. And if you're curious where I'm getting all this information from, I actually do have a book which is called Saving Your Future. It houses basic principles of building a financial foundation. It's 88 pages. It has over 2 million copies in print, printed in 4 different languages. So if you want to learn more about building this financial foundation, you're more than happy to come stop by at our financial center. I can give you a copy of the book, or I can have this book mailed out to you as well. All right. So this is where we are right now to make sure we help build that strong financial foundation for you, your family, even for your business. So let's start by talking about the X curve, as if we are talking about a typical life cycle for an individual, right? So while it does not always apply to everybody, and the case is very situational, I'll have to say that a lot of these life stages may appear common to most, and maybe for some of you, you're already living that situation, or maybe you might know someone who is, right? So typically, this X curve starts when we're younger, and it goes all the way when we're older. So there's 2 curves that intersect over there, and I'll be talking more about what those mean. So when a person gets out of university, or let's say, for example, when they hit their age of majority, what do you think is their behavior? What do you think is their psychology, right? Because when you get out of school, what do most people usually do? They go look for a job, right? And if they're able to find a job, great. And what happens when you work at a job? You earn a paycheck, right? And maybe because you're still starting out, you don't make much money as of yet. And maybe because you're still young, you're still full of zest and life, which I still wish I have that right now. I'm just kidding. Maybe you want to explore the world, right? Maybe you want to spend on things that you just want to spend on. Maybe you want to travel the world, see nice things, or be able to enjoy what life has to offer. And since you're starting out, as I mentioned, you may not have much discretionary income to save. What that means is maybe you make this much and then you probably spend also just as much, right? Because again, you're still kind of starting out. And eventually, if you have progressed in your career and you've started to make some good money, and maybe somewhere along the way, or maybe even before that, you might meet somebody, right? You might meet somebody, maybe go on dates, right? And maybe eventually you'll decide to live together and probably cohabitate, live in the same place. And what happens there is you're going to have economies of scale, such that you will have shared expenses, which could potentially increase the cash flow for both of you. But it's still going to be dependent on how one spends their money. That's why you gotta attend some of our financial literacy workshops so that you can take care of your money a lot better, right? And once you're in this phase, and then maybe you decide to get married, right? You decide to have children. What usually happens to your cash flow then? It oftentimes becomes less. And now the focus shifts on the curve that is about taking care of your family, right? Because when we're taking care of our family, those responsibilities start to pile up, as you can see on the blue line that's going down, right? And the thing that I hear most people say, especially during the younger phases of their life, especially when they have a young family, is there's not much left in the tank to even start building wealth, right? However, there are two things that we don't usually plan or anticipate for, especially during this very crucial stage in our life. First is, what if we get sick or if we get disabled, right? That disrupts our ability to earn an income, or maybe worse, pass away too soon. Because think of it this way, you might get sick, you might not be able to go to work, you don't get paid, but does that necessarily mean that your expenses are going to stop? Not exactly, right? So that's why in this phase, there's usually less financial security during this time. That's why proper protection is emphasized a lot here. And as you can see, when it comes to bridging the gap between your responsibilities and the wealth that you're slowly starting to build, which is represented on the green line over there, we have to take into account how much insurable need we actually need, right? Because every person's going to be different. And maybe for some of you, you might be thinking, you know what, $X thousand should be enough for my family. The question is, how do you determine exactly how much of a value you are going to be for you and your family? So
Yeah.
to keep it
Sorry,
short and
Ramon.
simple,
We just
yeah,
have a question in the chat from Shelly. I am actually a little bit, I do have a question about this too. When it refers to your income times 10,
yeah,
what is that referring to? Like,
yeah. So let's say, for example, if you earn $50,000 a year and 10 times your annual income equals $500,000. The reason why we suggest 10 times your annual income is that in the event that you pass away, it should give you more than enough time, or your family should have enough time to be able to move on without having to quickly find a secondary job, or be able to,
Mhm.
so at the very least they'll be able to survive off on the income that you've left for them. That's basically what that insurable need is all about. So yes, with the dime, that's debt, and that's 10 times your income. For some families, maybe 5 years worth of income might be enough. Again, that's going to be on a case-to-case basis. But just for simplicity's sake, we'll just put it for 10 times, right? So M stands for your mortgage. So if you have one, you got to make sure that that mortgage is paid off. And if you have children, you got to make sure their college education is taken care of. So that equals your total insurable need, right? So with the X curve on here, slowly by surely, it is expected that our responsibilities go down over time. And how is that usually represented? That means that the kids start to grow up, the debts slowly get paid up, and more cash flow is going to be funneled towards wealth building, which is on the represented on the green line over there. And you might be thinking, why is it that your the wealth line is a little low when you're younger? Because again, a lot of your expenses are funneled towards making sure you take care of your family, you take care of all your responsibilities. And maybe at some point in the future, those two lines will intersect and they actually switch places. So now, when your wealth has gone up, your responsibilities have gone down. That means now you're looking at taking care of yourself, right? So that's where your focus is going to be. Oops, I think I jumped way too fast there. There you go. So the thing is, when it comes to taking care of ourselves, especially when we get older, we have to think about one thing. It's called the wealth formula. And I would advise not to wait until you're older to start thinking about building wealth, but you got to start now. however much you can start, right? Maybe you can quantify it based on percentage of your income, or maybe however dollars a day that you can put away. So I talked about this last week with the wealth formula. That means that for you to build wealth, you must have money, and you must give it time for your money to grow. And what can influence your wealth is your rate of return, and also inflation and the taxes as well. That equals your wealth. So the thing is, money is often a game. And for you to win the game, you must know the rules. Okay. So, as I mentioned, when it gets to a point where your lines intersect, the kids grow up, your responsibilities go down, and hopefully we have planned enough for the longest vacation of our lifetime, which is our retirement. And maybe during this time, we become something called empty nesters. That means the cash flow might be better because now we have reached the pinnacle of our careers. During our older years, now we are faced with one last dilemma, which is whether we could live too long, right? I don't know if anyone has it on their minds, like how old youth guys think we'll live, right? So the question now is, will we have enough saved to not only pay for our daily expenditures, but to also outpace our inflation, right? And of course, retirement might mean different things for different people. It might mean different ages, but it's always good to plan on what that's going to look like for everyone. So that's why a good formula to start when it comes to taking care of your responsibilities and building your wealth is something we call the formula 10-20. So you may need 10 times your income to protect your family, and you may need 20 times your income to take care of your future retirement. So as I mentioned earlier, let's say, for example, for simplicity's sake, you make $50,000 a year. So 10 times your income to protect your family, that's going to be about $500,000. And you may need 20 times your income to take care of your retirement. So 50,000 times 20 is about $1 million. Okay. So that's a basic formula that doesn't imply general financial advice, but again, every person's going to be different. So you have to look into yourself and see exactly how much you need, right? And if you're not sure, that's where I usually come in. My team usually comes in so that we can help guide you towards exactly how much you need in terms of protection and also for building your wealth. Okay. And of course, for today's session, we're going to be talking about what's written on that square over there. It's all about taking care of your family. Because let's be real, guys, because I know everyone here, or maybe for some of you, you may already have a business, right? And I'm sure you're in business not only because you love the work that you do, but of course, you want to be able to provide for your family, right? So we want to make sure that, yes, it's good to make good money, but we have to make sure we think about protecting the money that we have worked hard for. Because at the end of the day, we want to make sure that our family becomes the biggest beneficiary of the things we do here. All right. So we always start by talking about the bigger picture with the X curve, especially when we sit down with people that want to learn about financial education. They want to learn about how money works. And since I related the X curve to an individual life cycle, let's go over the business life cycle. And if you own a business right now, perhaps it's a good time to reflect now at which phase you are on right now, right? I mean, there's like over 30, over 30 of you right now. So maybe some of you are already in business right now, right? Maybe you could start to think about at what phase of your business you're in now. But if you're not sure, let's start with the first step, which is the introduction, or I usually like to call it the launch phase, right? So in this launch phase, maybe you have a product or a service that you want to share to the world. So during this time, sales may be a little bit slow because you're still starting to get your name out there, but hopefully they steadily increase. And during this time, there may also be a need to raise a lot of capital to invest in equipment, maybe inventory, or maybe have your own office. Or maybe some of you may go right away into financing, maybe borrow from friends or family. Or I don't know if the guys from Business Link can help with that, right? But I'm sure
Yes.
they have all the connections, so they can help you with that part. Now, the profits usually lag behind the sales, and it usually creates a time delay between sales growth and profit growth. So when it comes to the second phase, or sorry, before we get to the second phase, the cash flow in the launch phase might still be on the negative side, right? Because again, you have invested a lot into the business and it might take a while for you to get started, right? Because this is due to the initial startup cost that may not be reflected in the profit, but they're certainly reflected in the cash flow. So in the growth phase, which is the second one, companies may experience rapid sales growth, right? Because now you're starting to get your name out there and sales increase rapidly. Businesses start seeing profit once they pass, I would say, the break-even point. And one phase I missed out on the side over there is something called the shakeout, which means that sales may continue to increase, but at a slower rate, usually due to maybe there's going to be an approaching market saturation or maybe an entry of new competitors into the market. So sales may peak during this phase. Although sales may increase, the profit may start to decrease, right? Because the growth in sales and decline in profit usually represents probably a significant increase in cost, because now you're making that money, then you think about reinvesting as much as you can, right? So when a business matures, which is the I'll say third or fourth phase, sales begin to decrease slowly. Some could just be coasting, right? They may already have employees running the company and also generating enough revenue to maintain such lifestyle. The profit margins may get thinner while cash flow remains relatively stagnant. Okay. And once we get to a point where your business has matured, we get into the final stage, which is the decline. So in that final stage, the sales, the profit, and the cash flow may all decline, right? Companies may accept their failure to extend their business life cycle by adapting to the changing business environment. And sometimes that's just how it is, right? But thankfully, I see an organization like Business Nick that I know for sure will really help you guide your way towards making sure your business doesn't get to that point. However, at the end of the day, sometimes some of these firms may lose their competitive advantage and they finally exit the market. Or maybe something that may not be out of our control. So let's say, for example, maybe a business owner decides to retire, or maybe sell their business, or maybe they dissolve their company, or what if, God forbid, they pass away, right? So why am I talking about these cycles right here? Because again, it is important to know where you are right now and understand that certain needs have to be addressed as you are growing your business. So much like the X curve that I explained earlier, right? Because introduction and growth, you're looking at, still have a lot of responsibilities, right? And then hopefully those responsibilities go down, right? And much like the X curve I discussed earlier, and also making sure that you have the financial foundation mindset at all times, which can play a very big role towards making sure your business continues to operate well beyond your declining years, assuming that is your plan or whichever succession plan you have in place. All right. So now I've talked about cycles. Now let's cover more about the next question, which is, what business entity are you on? Right? I talk to a lot of business owners, and sometimes it's hard for me to identify what sort of business structure they have right now, right? And why is this important? Because the type of structure you choose for your business has a significant effect on the way you report your income. The business structure impacts the type of tax returns you file each year, and among many other things too, right? So let's start with the very first one, which is the sole proprietor. Now, the sole proprietor is the simplest type of business structure. It is not incorporated. It's usually owned by just one person, and it's oftentimes considered to be self-employed. There's no limited liability, and he may hire employees here and there that is also managed by the owner. So typically, in a sole proprietorship, this person runs the whole business operation, generates revenue. They deduct from their expenses, their revenues. They deduct from their business revenues their operating/overhead cost, and that often equals to the, what do you call this? The net before tax, right? And with sole proprietors, the income tax you file is through a form called T1, and you do file them every April 30th of each year. So with such an ease of entry with sole proprietorship, there's not too much complication. However, because of such ease to start, and in the event the business goes sideways, your personal belongings could potentially be exposed to the claims of creditors, especially if you started financing a lot of the stuff in your business. For tax purposes, the owner and business is considered one, and they're considered as one. It's considered business income, and it's reported on the owner's personal tax return. All right. So most common examples of sole proprietors could be tradespeople, maybe for something like a massage therapist, or maybe if you're an insurance agent and you work and you have your own insurance agency that way. So the thing with sole proprietor is that the business is not a separate legal entity that can be bought, sold, or transferred to easily. So any assets of the business could form potentially part of the estate. So as I mentioned, because they are self-employed, they complete the T1 return, and they're also going to be 100% liable for any part of the business. All right. So maybe for a lot of you guys out here, maybe you might be considered this, or maybe you might be in a partnership. So what exactly is a partnership? It's a relationship between two or more persons, whether that's going to be an individual or a corporation. So in a partnership, we pool resources together to co-own business and share profits and maybe carry on business together. And obviously, because you are going to be business partners, you have a common purpose of earning a profit. And you may also still be considered self-employed for tax purposes. So there's generally two main types. So a general partnership means that each partner must report their share of the net partnership income on their required tax returns. And each partner is also jointly and personally liable for all business debts or obligations, not unless there was a partnership agreement that is stating otherwise. Another type of partnership is something we call the limited liability partnership, which usually refers to partnership between corporations with many professionals and also a lot of joint venture companies. So with a setup like this, the partnership must have at least one general partner who is going to be personally liable for all these things, right? And depending on the terms of the partnership agreement, that partnership interest can be bought, sold, or can be transferred upon death, right? So the thing is, but depending again on what your partnership is, it may have something we call an adjusted cost basis, which is the cost of the asset. So capital gain or loss can be triggered upon the sale or upon deemed disposition upon death, potentially resulting in some sort of tax liability. And that could potentially destroy the business if it's not carefully planned for, right? So I know I mentioned a little bit about tax, but if you want to learn more about it, I suggest talking directly to a tax professional. But that's basically what it's set up right there. Corporation, which is the third business entity, it's treated as a separate legal entity under the law with the same rights as an individual, can own property, investments, can carry on business, and can also borrow money. The greatest advantage for the corporation is that it allows for limited liability, which generally limits personal liability to a maximum amount, right? And with a corporation, there could be several roles in this one too, because there could be shareholders, which are usually considered the owners of the corporation. They receive the profits in the form of dividends. And the second one is directors. Directors are appointed by the shareholders, where they oversee the operation of the corporation for the shareholders' benefit. And also officers, which may be given specific titles such as a president or secretary, right? So that's why it's always very good to see what sort of structure you're in right now, right? I'm not gonna go too much about these things for the sake of time, but maybe a question that I want to ask too, right? Especially if some of you here on the call are already business owners. Maybe I'm just curious, what's your story, right? How did you get started in this business? And are you currently incorporated? And do you have a business partner? And one way to usually identify what sort of structure you have is how you submit taxes, right? And if you're a corporation, do you have the articles of incorporation, right? Or who do you have as your business partners? So which type of business structure is the best? Again, it depends on what your business is or how you want to get it started. And I think, again, I do want to credit the guys from Business Link. I'm sure they can guide you towards seeing what would be the better structure for you guys, right? So now I've taken a bit of a time in terms of like understanding what individuals are, what their life cycle is, and also understanding what the business cycle looks like. And now I emphasize a little bit about the proper protection because this is what I'm going to be talking about today. Because since we're all about financial literacy, it really helps to understand what options are available. And because we believe in a world where one size does not fit all, because every person is going to be different. So to move on with proper protection, I'll define a little bit what insurance is, right? I'm sure you hear insurance in many shapes and sizes, different forms, but insurance really is just a means of protection from financial loss. It's a form of risk management that provides a guarantee of compensation for a specified loss, damage, illness, or death. Now, the thing is, we insure a lot of different things, right? We insure our travel, we insure our home, we insure our office, right? We insure even our own travel. We insure a lot of these things, but we tend to forget to insure the one thing that's actually making all of these assets work, which is ourselves, right? That's why I want to introduce something called life insurance. For those who may not be familiar or maybe a bit skeptical about what life insurance really is, here's the definition. It's a way to protect your family from the burden of financial responsibilities, or you can also say business responsibilities, based on your needs and goals. In exchange for premium payments, the insurance company provides a lump sum payment, which is often called the death benefit, to the beneficiaries upon the insured's passing. So it's a way to make sure that in the event that you pass away, your family is going to be taken care of. And in terms of how much life insurance you need, I kind of covered that already earlier, which is through the dime method. So everyone's dime is going to be different. My dime is going to be different from Linda's dime, and with pretty much with everyone here, right? That's why it really helps to assess exactly how much of a value you have to make sure that your family is going to be okay financially. So other purposes of insurance could be for charity, right? Because maybe proceeds of life insurance you can pass on to your charity of choice. It could also be a very good estate preservation equalizer, which means that it can actually help even out the distribution of your assets to your beneficiaries or your family members, whoever you're going to name as the beneficiary, especially for those that have some beneficiaries who will inherit a business and some that will not, because you actually have the ability to treat them more fairly or equally with the proceeds of this insurance. It's also good for business planning. And one thing that not a lot of people take into consideration, it's actually a way for you to create wealth, right? To create an inheritance that's more than you could possibly do by just savings alone. So when it comes to life insurance, how do you actually quantify how much life insurance, right? So I mentioned about dime. Now I think about how we pay for them. So we pay for life insurance based on something we call the cost of insurance. It's dependent mostly on two things: our age and our health, right? And I always sit down with my clients, and when I talk to them about insurance, it matters to us how old you are, because the older you get, the more risky you're going to be to your insurance company, and also to your health. The healthier you are, the more chances you'll have better coverage and probably at more affordable terms, right? But that does not necessarily disqualify people that already have some sort of pre-existing condition or they've been previously declined, because we can still help them, right? And I don't want to get too much into a lot of those details because we actually do have a financial literacy workshop specific about talking about insurance and protection and all those things, right? So for the purposes of today's presentation, I just want to give you an overview about what are some of the options that you can consider in terms of properly protecting yourself and your family, and also protecting your business as well. All right, so just to go over, there are two main types of life insurance. One is called term. Term provides protection against financial loss resulting from death during a specified period of time or term. So as the name suggests, you're only covered for a certain period of time, maybe only for 10 years, 20 years, maybe 30 years, or maybe it'll cover you to age 100, right? Now, at the end of such period, the protection will cease unless the policy is renewed. So let's say if you have a 10-year term, and when the term is up, you can choose to renew it. But when you renew, because you're going to be 10 years older, your premiums or your payments are going to go up as well. Or maybe in some cases, that policy will terminate. Now, some policies will allow you to convert to permanent coverage, which I'll talk about later on, without having to prove your evidence of insurability, which means that if something had already happened during the course of your term insurance and you cannot be approved for permanent or any other insurance, then you have the ability to convert that. Because with permanent life insurance, you're essentially going to be covered for the whole life of the insured. Now, because of permanent insurance, you're not just going to be paying for the cost of insurance, but you're going to be paying a little bit more into the plan. And that actually helps build up something we call cash value, which is associated to the account that helps pay for the cost of insurance as you get older. And how that cash value is treated varies on the type of permanent insurance you're going to get, which I'll go on the next slide. There's two types of permanent life insurance. One is whole life. Whole life gives you a fixed annual or monthly premium that you pay, and that's payable for the entire lifetime of the insured, or maybe on a limited basis. So you can say that you can pay until age 100, or maybe you only pay for like 10 or 20 years, right? And as long as you don't cancel the policy, you're going to be covered pretty much for your entire life. It gives you a low guaranteed interest on the cash value, which is accessible via withdrawal, surrender, or taking out a loan from it, right? So that's the side effect of you paying more into the plan, because you actually help build an asset inside an insurance policy, right? Another type of permanent life insurance is universal life. Universal life is a policy that provides coverage, as I mentioned, for the life of the insured, and it actually offers the policy owner complete freedom with regards to how much you put in, how long you're going to be paying into the plan, and also how long, the duration of deposits, right? You also have control as to where you can invest the money as well, which I forgot to mention, which means that you have control and flexibility with the type of plan that you set up. Because in universal life, part of what you're paying is going to go towards the cost of insurance, and the rest of it gets indexed to usually to third-party investment funds where you can pick and choose depending on what's available. And the cash value inside these policies are also going to be accessible, similar to whole life, right? So I was thinking about putting up some illustrations to see what concrete examples are, but I don't want to take it into consideration. I want to take into consideration rather that every person is going to be different, and maybe everyone's affordability and suitability is going to be different. But if you want to learn more about how these things work in complete detail, I do want to invite you to attend a workshop, right? So that you can actually learn in specific how it can actually work for you and your family, right? But I'm just giving you some, tidbits, some little strategies on what are some of these insurance options. So other forms of insurance, one is called critical illness insurance, which means the insured that is diagnosed with a covered illness receives a lump sum to use whichever way he or she sees fit. Because you have to think of it where maybe you did not pass away because of your sickness, but you still somehow survive. While it is a good thing that you may still be alive, but of course, because of your illness or your situation, potentially you might not be able to go back to work, right? So critical illness insurance will provide you that lump sum payment so that your finances can still be taken care of. And the benefit is generally not subject to tax, which is also good as well. Disability insurance, it pays the insured a monthly amount, which is typically up to 60% of their net income. So the difference between the two is that critical illness pays you one time, disability insurance pays you monthly, because it actually provides a safety net if you are unable to work for an extended period of time. And especially for business owners, it actually helps to cover some of these recurring expenses, right? Maybe for some of you who are already working full time, maybe you'll say, oh yeah, I already have insurance at work. The question is, what sort of insurance do you have at work? Because sometimes when I ask clients that, it's hard for them to articulate exactly how much they're covered for, right? How much they're going to get and how long they're going to be protected for, right? So I'm not saying it's a bad thing, but again, it really helps to be educated to see what exactly you have. Because at the end of the day, who's going to benefit? It's going to be you and your family, right? And other forms of insurance could be extended health insurance, which again, if you're working full time, your company may offer you this sort of insurance package, or maybe even those who are working part time, because these extended health insurance is offered by private companies to cover expenses in excess or those that's not covered under the provincial plan. So maybe you might hear things about your dental's covered, your vision's covered, um, extended health's covered, like getting your registered massage therapist or any other medical practitioner sort of service. And last thing I want to talk about is travel insurance, because it actually helps cover for emergency healthcare while you're outside of Canada, whether you're going to be out on a personal or a business trip. And if something happens to you over there, travel insurance will cover you in the event of an urgent medical emergency. And it can also be used to cover visitors to Canada as well, right? So, of course, pricing and quotes are going to be different based on someone's age and how long they're going to be traveling for. So, the very least, you get to know some other forms of insurance that's available as well, right? So, now I'm going to talk about the need for protection for business owners. Because the thing is, what I talked about today doesn't just apply for individuals and families. It actually helps for business owners as well, right? To make sure that you provide a sense of peace of mind and security for you, your business, even for your family as well. So when it comes to this need, there's usually four main things that usually come up. And while there's also other things that we have to take into account, just for simplicity's sake, I'm just going to go over these four main things as well, right? So first thing that we need to consider the need for protection for your business is having something we call key person coverage. So what is a key person? A key person is someone whose skills, knowledge, or experience, or maybe their leadership, are important to the business's continued financial success. So let's say, for example, if me and Linda start a business, and let's say I'm the one that's bringing all the sales, bringing on the revenue. So we have to have that mindset where, let's say, if I pass away, what happens to the business? right? What happens for the business, for its ability to earn money, right? Because for some business owners, they may have certain skill sets. And if they pass away, who's going to take over, right? A lot of people will potentially take advantage of that part, right? So that's why we gotta make sure that we take care of the person, that if they're the one that's bringing in the revenue, we gotta protect that person, right? That may be just one single person, or maybe it's a handful of people who are important and integral to the success of the business. And in most cases, they're hard to replace, right? Because let's say if I pass away, Linda's going to be left on her own. Now the question is, can Linda do the same things as I do? Probably. But what if she go hire someone? Can she transfer all the knowledge, the skills that what I learned, that what I do, right? In such that they can equal or surpass what I have done to provide revenue for the business. Because you have to think of it from that business angle. You also have to think it from a family standpoint as well, right? Whoever is going to be the breadwinner of the family. Because maybe some of you guys may heard the saying that cash is king, right? I like to say cash flow is kingdom. Cash flow is important, right? Because key person coverage is no different from making sure that we protect the family as much as possible. Because if the main breadwinner dies, who's going to be left to make sure all of those expenses they take care of? Who's going to be left to make sure the mortgage gets paid up, that their kids are able to go to school, right? Because it actually helps with revenue generation or actually help reduce expenses. And how key person coverage will come to play is that the funds from the life insurance policy, based on the key person coverage, can help reduce that impact, right? So again, depending on how much you need, it will vary from person to person. It also greatly depends on how much value that key person is bringing in, right? Because you also have to relate that to family dynamics as well. Because what sort of potential hardship is going to happen if ever, the main breadwinner, the main person that's bringing in the source of income, if they pass away. So that's why we always like to do a financial needs analysis to really measure what sort of income loss the family is potentially going to have. And also think about the insurable interest on the survivor, right? So next is business continuity. So while key person and business continuity, they might sound the same, but the thing is, it's a little different here on the second one, because this talks primarily about the business itself, right? Because this need applies to the successful operation of a business following the death of an owner or a single skilled person. So what I mean by that, this need can be best seen when a business has that one person who is absolutely necessary to the business. And if that person dies, the business will collapse. So you have to think from a perspective of the first one, key person coverage, it's the person that brings in revenue. The second one, business continuity, is about if that person passes away, who's going to take care of the day-to-day operations of the business, right? And this need applies, of course, to the successful operation of a business owner, of a business following the death of an owner, right? So you have to think about who's going to take care, look over the day-to-day operations of a business in the event that person passes away. While it may not always have to be the owner, it could be that person that actually oversees the whole thing. So because what usually happens if there is no real plan in place, because let's say, for example, we have to think about the significant influence of the people closest to that business owner. So like I mentioned earlier, let's say if me and Linda are going to be in business together, right? And if I pass away, most likely, what if my wife takes over the business, right? Yes, my wife can take over, but the question is, will she have the same skill set and mindset in terms of managing the business, right? So in cases like that, potentially the value of the business could be greatly eroded simply because there isn't much experience, much planning being done towards making sure the business continues even beyond my passing. And also, a good thing here to point out is that proceeds from life insurance policy can actually provide liquidity to address a lot of these pressing business concerns. Because some of the pressing business concerns that I'm going to talk about is you have to think about the value of the business as well, right? Because yes, maybe my wife will take over, but will she have any idea of how we're going to run the business together? Or maybe a good question to ask too is, will she be able to get along with Linda, right? That is, if they've ever met in life, right? So this usually happens every single time when the business owner retires or gets disabled or if they pass away, right? The business stops, right? And what happens to the business? You have to think about the equipment that you already bought out or financed, and a lot of complication tends to happen here. And there could be a lot of creditor demands too, which will lead me to the third one. So when it comes to creditor demands, you have to think about, let's say, for example, you're in a farming business and you're leasing a lot of large machinery. And if the farmer passed away, the leasing company, do you think they're gonna get their machinery back? In most cases, they might want their money back, right? And when it comes to business continuity or maybe discontinuity, family interference could potentially come into play as well, especially if you have a family run business where the owner usually could be the parent dies, and then the family dynamics might disrupt or potentially end the business. Because let's say, for example, the business don't, or sorry, the siblings don't get along, right? Maybe one sibling wants to sell the business, or maybe the other one wants to continue. So if there's no real planning in place, what's going to happen to the business, right? So you got to make sure that we take care of all those things as much as possible. And the third one is corporate liabilities. So this is talking mostly to corporations now, because corporations will have outstanding liabilities such as to creditors, inventory suppliers, maybe to CRAs, or maybe to a line of credit from the bank. So if a key person who negotiated these credit deals dies or passes away, it's highly likely that the creditors will be calling actually for a repayment, maybe a renegotiation, or they want an immediate payment. So what are some examples of corporate liabilities? You have to think about creditor demands, as what I mentioned earlier. Because think of it this way. Let's say, for example, you're a mortgage homeowner, right? And let's say both you, husband and wife, own the mortgage. And let's say if one spouse dies, right? Obviously, you have to let the banks know. But do you think the banks would be able to change such conditions to make changes into their mortgage? Not really, right? That especially if the survivor does not have sufficient income to prove that they can still take care of paying down the mortgage, right? And another example is, let's say if there's a lot of work in progress in your business. Let's say if you're working with construction people, lawyers, maybe contractors, right? Who's going? Are they going to get paid in the event something happens to you, right? Because going back to the example with a mortgage homeowner, it's actually no different. The business with these liabilities, it's no different with families too, because if a person passes away, creditors want their money, right? And in business, when a business owner dies, these creditors also want their money as well. Probably not so much with the equipment, because think of it this way too. Who actually negotiates all the financing of buying these inventory, right? Because let's say, for example, you buy a certain machine or equipment and you put on a 5-year payment. And let's say if the business owner dies on their third year, do you really think the manufacturer is going to go to your office and say, I want that equipment back because you're no longer paying for it? No. In most cases, they'll probably want the money back, right? Because they don't want to get that equipment, because when they see the equipment, it's going to be more like a depreciated asset for them. So they're probably more concerned about making sure that they get paid, right? And also, another example is, let's say you have a 5-year lease on the rent on an office. And let's say if the business owner died on the third year, do you really think the landlord's going to give you the next 2 years free if you pass away, right? So maybe they'll put your business on the hook for the remaining years. And let's say if this business is transferred to the spouse, right? Maybe the spouse can negotiate, but how much of a negotiating power will they have, right? And a lot of these things could potentially jeopardize business value. So that's why having these proper protection strategies in place will make sure we take care of all of that. Now, lastly, is shareholder partnership agreement. It's an arrangement among shareholders or partners that describes how a company or a business should be operated based on the rights and obligations of the business. So when it comes to this shareholder partnership agreement, think of it like when you're getting married, right? What do you usually sign, right? It's not just like the agreement that you sign when you get married at church or in a civil way, but you have to think about something we call a prenuptial agreement, right? And one of the key things that must be on that agreement is what happens to the business if one of you pass away, right? Because the good thing about having some sort of protection in place, aka life insurance, is the proceeds can actually be used to fund such agreements in the event of death, because such funding may be required. Because let's say, for example, in the example that I have with me and Linda, so let's say if I pass away, maybe Linda doesn't get along with my wife that well. Maybe she'll offer my wife to say, it's either you buy me out of the business or I'll buy you out, right? And where's she going to get the money? That's where proceeds of life insurance would potentially help fund such agreement, right? In those things. Because the thing is, yeah, maybe they might not get along, or maybe hopefully they get along, but maybe some cases it might not, right? So that's why it's a good way to make sure that you properly protect your business. Because I always like to say that business is family, they're going to be interconnected. Like, say what you want about work-life balance and all the kind of stuff, right? But we have to think about making sure that how we run our business we should also be able to take care of our family so that one or the other doesn't intersect, right? So that's basically what are the four needs of proper protection for your business. And there's also other things that we want to talk about here, but in the interest of time, there's still other factors we have to consider. And maybe if Linda will invite me for a third session, I'll talk more about it, but maybe at another session I will. So you have to think about retirement planning too for business owners, right? You have to think about, let's say if you run a group of however many employees, do you have some sort of company pension in place for them? Right? And what are you currently doing with your retained earnings? And what sort of rate of return are you earning on your investments inside a corporation? And also, one thing to note is ensuring everyone gets a fair share, not just with your shareholders, but also with your family members as well. And especially if you're a family-owned business, how many of your family members are actually involved in the business, right? And which assets do you want your beneficiaries to sell? And what percentage do you want each of your kids to have? So I'm going a little bit deeper into like the estate planning world, but I don't have advice for that. That's why it's best to talk with someone who's an expert in estate planning for that. But of course, those are some questions that you need to start thinking about, especially if you're running a business. And when it comes to wealth transfer, who do you want to be the biggest beneficiary of your corporation, right? Or maybe of your business in general, right? Do you want to make sure that your family gets a big slice of the pie of the business that you've built? And if you're working with accountants, and I hope you're working with accountants, especially that you have a business, have they prepared a tax summary of your potential capital gains? Because that can be taken into consideration. And who are you hoping to pass your company down to one day, right? Because yes, it's good right now. We're starting a business. We're all about accumulating, generating revenue, reinvesting, accumulating savings and wealth. Now we have to think about, and as grim as it sounds, we have to think about what ifs, right? I'm not here to scare anyone here, but that's just the reality of the situation, right? We have to think about a lot of these things, and we want to make sure we think about who's going to take care of the business if we soon pass on, right? Are we building the business only while we are alive, or do we hope that this business will continue even beyond our death, right? And going a little bit beyond in terms of like taxes, you have to think about your potential tax liability if you're to pass away. And of course, who's going to be the current beneficiary, as I mentioned. All right. So that's basically the need of protection for your business because, again, they intertwine with your family's affairs. So you got to make sure that all these things are properly set up. And that's why if you're not sure whether insurance is a suitable product for you, or maybe if other strategies might be a good one for you. So we emphasize this sentence right here that you need a checkup, right? I just had my car serviced yesterday and just thinking, I do my car service at least twice a year. I go see my doctor routinely, maybe at least once or twice a year. But how often have you had the chance to go through your numbers and see what's going on with your financial life and maybe with your financial business too, right? So if you're not sure if insurance is the right product or strategy for you, because we do have other elements in the financial foundation that we have to take into account. So you got to make sure you find out exactly what you need. Calculate your protection need as well, the coverage amount, which I talked about earlier. It's called time. You got to assess your financial situation, right? If it has healthy cash flow or if it's not going well, and make sure to rearrange your budget and cut down unnecessary expenses if you must. Then you can make a better decision. I would also like to add that make sure you're financially educated as well on what options are available, because we are not a one-size-fits-all kind of deal. You got to make sure that every person has different needs, different goals, right? And the question you want to be asking yourself too, especially when you are presented with an insurance plan or whatever sort of plan that will help build your financial foundation, is it going to be suitable and affordable for you? So we're not just asking this from an individual standpoint, but also from a business standpoint as well. right? So I'm gonna give credit to someone that I saw on social media yesterday that when it comes to life insurance, Linda, there's usually four types of people. First set of people are those that need it and they actually want it. The second are those who need it, but they don't want it. The third one is those who don't need it, but maybe they still want it. The fourth one is they don't need it and perhaps they don't want it as well. So it doesn't matter which type of person you're going to be. I really do hope that you're not the second person, right? Because at the end of the day, we have responsibilities to take care of, and you have to assess which product works best for you. And especially if you have a business or if you have a growing family, you have to know exactly what sort of plan will make sense for you and your family. I'm just showing you the options here. I'm not throwing any financial advice. That's why it really helps that if you want to learn more and see how this strategies will work for you in building your financial foundation, I would suggest come book a complimentary financial needs analysis with me or my team, right? Because we want to help you better understand your unique needs so that we can develop a financial plan and succession plan to help you achieve your personal and business goals. So what I'm doing today is just giving you general information and a little bit more specific towards how all these things work, right? But in terms of what your unique situation is, like I won't have time to answer your unique situations, but we're gonna make sure that we sit down one-on-one and learn more about your life, your situation, and especially if you're a business, usually it would make sense if you would have your accountant with you as well, right? Because your accountant will have the numbers and the business owner tends to focus on growing the business. So we have to do a bit of fact finding to know exactly where you are right now and see what your goals are. And if you're still not convinced about booking a time with me, hey, we actually encourage you to attend our free workshops, whether you can attend them online or in person. We do host workshops on a regular basis, and we do host our workshops and classes here in our own financial center in Calgary and in many different places all over Canada and United States. And these are just these are the 6 topics that we focus and talk about. And in case you're wondering, well, it does say already, it's free, right? If you want to learn more, I have a copy of the book right here. You're welcome to come over, or I can send you a copy of this book. And what will actually complement your experience attending the workshops is we have a workbook, right? That you can actually fill out, write down, and reflect about your situation, right? Because yes, we do offer products and services that cater to individuals, families, and businesses. But at the end of the day, we want to make sure that these people are properly educated with what is out there and really understand, because a lot of what our clients get from us, it's simply a byproduct of the education that we provide, right? And we want to help people build that strong financial foundation so that they can really ensure that they protect, they grow their wealth. And as the saying goes over there, there's nobody more interested in your financial future than you are, right?
Perfect. Thank you so much, Ramon.
So
We're just
hopefully
nearing
I'm not over time, but yeah.
we're right there at the at the time, but that is totally fine. I just want to thank you again for being part of this session today. Very insightful. So last time we learned about building a strong financial foundation, and today we'll learn how to build security for both your business and family, and even yourself. So yeah, thank you so much to everyone for attending today's session. I do really
Actually,
appreciate
sorry,
your
Linda, maybe
time.
I'll just throw my I guess I can throw my
Yeah, you can
LinkedIn
just put
page.
it in the chat.
Yeah.
That'll work.
So I'll throw in my
Um,
LinkedIn page. So if anyone wants to connect with me, learn more about what I do, or maybe you have some very specific questions about your business, you can just add me on LinkedIn. And then we can definitely have a conversation.
Thanks, Ramon. And then, if you're definitely ready to take the next step in your business, just remember that we are here to help as well. Business Link, we offer the free one-on-one business advice and support for your business needs. We'll help you with your business plan, with guided support. We also have different programs like the digital marketing program. We host these weekly webinars. Thank you, Ramon, for being part of this one. This two-part series for Financial Literacy Month. We have learned a lot, but yeah, feel free to scan the QR code on the screen if you would like to book a meeting with one of our amazing business strategists to get you started in your business journey, or if you even just want to scale your business. So thank you everyone for being here today. We can just leave a few minutes for questions. If anyone has any questions, feel free to put them in the Q&A feature or just in the chat if you have any. We do have a question here from Sumit that says, how do I book a face-to-face session and workshop?
Yeah, so thanks, Samit. You could just connect with me on LinkedIn if you do have LinkedIn. My link should be on there for you. And I'm sure, Linda, you're gonna send a follow-up email for all the attendees as well, and for those
Oh,
who were
for
not
sure.
able to attend. So just log on my information on there.
Perfect. Awesome. So we're just 2 minutes past the finishing time for today's session. So once again, thank you everyone for attending today's session. Just remember to fill out the survey that will pop up at the end of this webinar. Just remember that your feedback really helps us improve these webinars and events and bring great speakers for this session. So thank you everyone for your time, and I hope that you can stay connected with us via social media or just connect with us on our Business Link website. And if you want to connect with Ramon, you can connect with him via LinkedIn, and we'll make sure to provide his information on the follow-up email after this session ends. Thank you, everyone. Have a wonderful rest of your day and happy Financial Literacy Month.
Awesome. Thanks, everyone.
Bye.